Well, good morning, everyone. Good morning. It is Christmas week. Very exciting. We've got lots of people out doing family things, flying, driving, crossing the country to visit family, but I am happy to be here. Originally, we actually had today's meeting canceled, but last week I was like, oh, what the heck? Let's go ahead and meet. Why not? I'm in town. Why wouldn't we meet? So I'm really excited to see you all here this beautiful Monday morning in Austin, Texas. We got our little 80s tune going. I've got an 80s kid. And what I mean by that is that, man, my kid is all about the 80s. And I told her, you can watch all the 80s movies, well, the appropriate ones. You can listen to all the 80s songs, but please, no 80s haircut. No. The two things, no 80s clothes, none of that neon jogging nonsense, and no 80s haircut. Otherwise, you can listen to all the 80s music that you want, but she is definitely an 80s girl, which is really kind of nostalgic in a way because all of her favorite songs are from the 80s, so I feel like I'm reliving my childhood. Yo, it is so good to see you this beautiful Monday morning. We've got a light crew today to be expected. It is Christmas week, and I trust that you all are going to have an excellent time with family members and whatnot. But we are going to see what's going on with the market. What in the world is happening in Austin real estate? The reason I wanted to meet today is just to see how are we doing, we as a market, how are we doing 22 days into the month, knowing that activity is going to go down between now and the end of the month. So we're not going to have the same level of volume that we see towards the last week of every month. So what's going on? How is the market performing? How are we closing out the year? And how is it, really setting itself up for the next year? So this is going to be a very quick meeting. We're going to really hit it hard, take a look at everything. Let's go ahead and get started. As you know, we are going to update our faithful and true new listing to pending ratio, the single best leading market indicator available for the entire area. Really quick recap for those that are here live with us and also for those who will be watching on YouTube. The reason I really like this ratio is because it gives us that perspective on, in relation to everything that is new on the market plus back on the market, what is that ratio? So we simply take the new on the market plus back on the market, we divide it by everything that is active, under contract, and pending. If you have a ratio of 1, that is what we call that perfect market equilibrium, meaning 100 properties came into the market and 100 properties were absorbed by the market. So inventory over time neither goes up nor goes down. When the ratio is over 1, let's just use last year as an example. This week last year, the ratio was 1.09, meaning 100 properties came into the market and 109 properties were absorbed by the market. So more properties were absorbed and came into the market. When you take a look at 3 weeks ago or 3 weeks ago last year, rewind 3 weeks last year, the ratio was 0.89, meaning 100 properties came into the market, 89 properties were absorbed by the market. So of course inventory goes up because less properties were absorbed by the market in relation to properties that entered the market. So that's why I like the ratio, because it really does take that new listing to absorption comparison, as opposed to only looking at new listings. We're only looking at active listings. There are situations where new listings are down 20% month over month. Well, yeah, this is a seasonal market. We get less new listings entering the market towards the fourth quarter of every single year. That's why active listings go down. But in relation to what's pending, that's what I care about. The reason why this is a leading market indicator as opposed to a lagging market indicator, like sold properties, months of inventory, sold price, median sold price, average sold price, those tell us what the market did 30, 45, 60 days ago. This ratio tells us what the market is doing right now. That is why it's so important. So let's go ahead and start updating all of this information. First thing we're going to do is we're going to go backwards in time a little bit from the 8th to the 15th. And we're going to take a look at how many active under contracts, see if we have to update this. We do. This goes up from 353 to 355. Now let's take a look at the pending. This number goes up to 323. Ooh, that doesn't go up. Interesting. It usually does. Let's go from the 1st to the 8th. This goes up to 393. Now we're going to go from the 24th to the 1st. This goes up to 409. Let's go from the 17th to the 24th. This goes to 483. 10th through the 17th, 462. I'm going to do one more week. And 431. This is 431, which means we're going to do one more week. Want to make sure that we are capturing all of the accurate data. That stays the same. When I get 2 consecutive weeks where we don't change, then we're all set. So now we're all set. Now it's time for us to take a look at what is going on this week. So far, new listings, we crossed the 500 mark. We're at 502. 502 new listings. The next screen that I'm going to share with you, we are going to compare how does this week compare to the same exact week last year. Now let's take a look at price increase. We're at 146, low number to be expected. Let's take a look at price decrease, 927. Same ratio, percentage ratio, 86 2 weeks ago, 86 right now. Back on the market, I'm expecting this number to go up, and indeed it has gone up. 152, 30% back on the market. Whoa, this is going to be the largest back on the market number, you all, that we have seen going all the way back to this time last year. That was 35% back on the market. And that was like a week from now. Same week last year, it was 21% back on the market. That is a big number. Big number, very big number. That is matching the headlines that we are reading across the entire nation, that back on the markets are going up 30%. That is surprising. Let's take a look at active under contract, 253. And now you get to guess how many pendings. How many pendings? We've got a light crew here today, only 11 people, but I still want 5 guesses. We've got Mr. Austin Bishop starting us off at a very accurate 165.875. I love it. We've got Ryan following with 189, 3 down. We've got Harold at 200, 3 down, 2 to go. Let's get 2 more people to throw out some guesses, and then I will click on that field. We've got Mark. Mark is a very bearish 1. What is it? Your 1? Did you get a deal under contract this past week, Mark? You better have. We've got Mark with 1, 4 down. 4. We've got 185. Manira closing us off at 185. We've got Joe at 170. The number comes out. Ooh, it does start with a 1. 191. 191. It's a low number. Call it like it is. This week's ratio at a 0.68. This same week last year, we finished off that week at 1.09. Last week, 0.89. That's going to go up a little bit, maybe towards the 0.91, 0.92. We still have agents updating pendings. But that week last year, 1.09. 3 weeks ago, 0.85. That same week, 8.9. So we have now been trailing last year for 5 weeks in a row. The fact that we're at a 0.68 right now means that we are not going to beat the 1.09 from last year. So last year is going to beat this year. That is what we are forecasting right now. Do you remember what that number was last week when we updated this new listing to pending ratio? I can tell you that in a few seconds here as I pull up our Monday recap. That ratio last week, we started off last week at a 0.66 ratio. So the ratio is slightly better than last week. Last week 0.66, right now we're at a 0.68. Last week we jumped from 0.66 to 0.89 in 1 week with agents updating the active, under contract, and the pending. So I do forecast that this number is going to land somewhere around the 0.9 to 0.91 as we continue to update this information. I update this on a daily basis. I have to. So let's take a look at the comparison. Good news. We are not going to beat last year on new listings. So we've had 3 weeks in a row. 3 weeks ago, we had a double-digit miss on the number of new listings entering the market this year compared to last year. That dropped down to 2.5%. Right now we're at 12.4% negative, 12.4% less new listings entered the market this year compared to last. This number is going to shrink. We're at 71 right now. I do forecast, I'd say about 30 or so new listings coming on the market between now and 11:59 p.m. once this data locks in. So we're going to be negative single-digit percentage. We've had 4 less price increases. That's going to turn positive. Already 274 price drops. Do you think we will still exceed 20,000 homes on the market in 2026? If I were a betting man, if I were a betting man, Ryan, I would roll snake eyes on that. Absolutely, 100%. There's nothing that will prevent us from hitting 20,000 active listings by May, June timeframe, if not sooner. I am as sure as I am that Elon Musk is going to become the world's first ever trillionaire next year. Those are 2 things that I am completely assured of. That absolutely will happen. Yeah, end of May, if not sooner. For me, that is a fact. Especially when looking at the permitting data and also looking at what's available for lease and what's happening within the leasing market and how days on the market for the leasing market is exploding. Well, let me just throw out a little thing. It's a really good segue before we update the monthly. I want you to, a few guesses. And don't go to this website, guess. If I went to apartments.com and I searched Austin, Texas, and it's going to give me the Austin area, how many apartments are currently available in Austin right now? Just throw out a guess. 35,000? How many apartment units are currently available on the market? Okay, 22,000. We got 35,000, 22,000, 50,000. Your guess, Austin, was like phenomenal. Apartments.com. Austin, Texas. 38,223. By the way, it was 35,000 last week. It was 35,000 last week. It's 38,200. And keep in mind, this doesn't go all the way up to Georgetown, Liberty Hill, Leander. It goes up to Cedar Park. This is Austin. If I go to, let's just start adding Cedar Park, Austin and Cedar Park, 39. Let's go to Round Rock. We had a lot of apartments come on the market in Round Rock. Yeah, that's 42. We've got Pflugerville. Now we're at 43. We've got Leander. Now we're up to 44. Then Liberty Hill. Oh, limit of 5. Do you know the percentage of total inventory? Just one percent. So can you clarify the question? What do you mean percentage of total inventory?
Do you know, like, what's our total inventory? You said we're at 38,000, but like out of 100,000? I mean, I'm just wondering. I have no idea how large the market is here.
It's about a quarter million available units.
Gotcha. Thank you.
Yeah, a very good question. Yeah, it's about a quarter million available units. So, and keep in mind, I mean, this is insane, right? So you got Austin, Cedar Park, Round Rock, Pflugerville, and Leander. What am I missing here? I'm missing Buda, Hutto. I'm missing Kyle. So, who said 50,000? I think it was Anais said 50,000. Yeah, when you add all of the outlying areas, we get to 50,000. We're only at 5 cities. Now let's take a look. Let's just clear everything. So 44,000, and now let's add Hutto. So 44,000 plus 675. That was 44 and change. So we're at 45,000. And let's add Buda and Kyle. Buda. So Buda 644, and let's add Kyle. So that's 2,000. So we were at what? 45. Now we're at 47. And we got Liberty Hill. You just start adding some of these other areas. We're at 50,000. So let me ask you this. Do you think we've got an inventory problem? Absolutely not. Now, with the availability of apartments, rental units, some of them are going for very attractive pricing. There is no way that I do not expect 20,000 active. It's going to be, we're absolutely going to hit 20,000. What builders are doing, they're doing a really good job slowing down on new construction. So at one point, they're going to get rid of that available inventory, and we're going to see a lack, I'd say 2-3 years from now, an actual lack of new construction inventory. The building permit data is not out yet. We are still waiting for the October-November permitting data because of the government shutdown. That's going to be one of the last data points that we're going to have access to. So the last data point that we have access to on building permit is September. So we're still waiting on that information. Mark, what's up?
Yeah, so the trickle-down effect on this would be then on the home lease market, obviously.
Yeah, of course, you're absolutely right. And if there's a trickle-down effect on the home lease market, then what do those landlords all of a sudden start thinking about doing?
Selling.
That's exactly it. And we are already noticing that.
And how's this growth been over the last 3-4 months on this market here? And because I'm not to be political, but tying it in with what is happening with immigration.
Well, yeah, we've got less people that need housing.
Exactly. Okay.
Absolutely. And we also have a very interesting demographic shift that is going on within Central Texas that no one wants to talk about, but because it's not front and center right now. And that's going to be more of a 10 to 15 year cycle as opposed to an immediate thing that's happening right now, whether it's immigration, interest rates, is that we do have a lot of baby boomers that are holding on to real estate. Why will they move? They've got very, very good over 65 exemptions, so they're going to stay put. But eventually, that stock of homes, it's going to be available. That's what's going to happen. So that is also something that it's a cycle that we do expect to influence inventory, not immediately, but more so in the next 10 to 15 years. Yeah. So that's a very long answer to a very, very, very simple and yet extremely important question, which is, well, what about inventory next year? So absolutely, inventory is going to go up next year. We've had 274 more price drops, already 31 more back on the market. That number is concerning. The sheer number of back on the market, 30% back on the market, that's a very interesting number. What's happening right now with the consumer is we're still noticing that collision between sellers and buyers, meaning a lot of inventory available for buyers. They're getting really, really picky on the inspection report. I don't blame them for that, as they should. A lot of the buyers are getting the inspection report, and guess what they're telling the seller? Yeah, I want everything fixed. Everything. Oh, that light bulb, I want it fixed. Oh, that faceplate is, that screw on the faceplate is, jiggling a little bit. I want that tightened up. I mean, everything. Later on, maybe on another Wednesday, I will show you the inspection report and the amendment that I received on one of my listings. And it was, as a matter of fact, I'm going to try to find a picture here for you because it was just amazing. They wanted, I'm going to have to find a picture for you because it was almost laughable. And at the same time, I had to really calm my client to say, hey, like this is not a big deal. Like let's go ahead and just get this done. In the AC unit, you've got the AC power cord that comes down, and you've got that little clip that you just screw to the hardy plank. That little screw popped out. That screw popped out. And my client's like, this is ridiculous. Like, they're nitpicking. I'm like, let's just screw it in. Let's not be a part of the 30% that come back on the market. Like, it's not a big deal. Like, I'll go there. Like, let's just screw that in. Like, not a big deal. But why does the buyer feel like they should ask for all that? Well, because they've got the leverage. But yet, you've got some sellers right now that don't realize what's going on. So the seller's like, no, wait a second, you're not buying a new construction. This is not a builder property. Take it or leave it. And then the buyers are like, I'll leave it then. And then the seller's like, whoa, wait a second here. No, sorry, I just put an offer on another house that just came on the market for a better price. Right? So there is this collision that's happening right now between the buyers and the sellers. And that will continue to happen here for the next 2-3 months. We've got 97 less active under contract and a whopping 215 less pending. So we are down only 12.4% on the number of new listings, and yet we are down 41.3% on the number of properties that went pending. 2 weeks ago, year over year, we're down 20.4%. That's a really big deal. That's a big change. So we're going to be double digit off on pendings compared to last year. And the last time we were double digit off, I have to go all the way back to March, where we were down 13.3%. We're not going to stay at 20%. That's going to shrink down. It'll land somewhere around the 13 to 14% off on pending. So keep in mind that if we are consistently off over the past 5 weeks, we're averaging 15%. Let's just say that this number is going to shrink down. This is going to shrink down. So we're going to be down 10% on the number of pending transactions compared to last year. And then you add the fact that you've got a 25 to 30% back on the market rate. We have to incorporate that into the closings. So closings are going to go down. We know that. If pendings are down, I don't know if you realize this, hopefully you do, but if a property doesn't go pending, does it close? No, it does not close. So if you got 1,000 properties that go pending, not all 1,000 are going to close. Statistically, right now in this market, 1,800 roughly are going to close out of the 2,000 that go pending. So we notice a pullback on pending. That's where we can make a really good forecast for the next 30, 60, 90 days, saying we're going to be down year over year on the closed because we're already down year over year on the pending. Let us take a look at the monthly data so far for the month of December. First thing we're going to do is we're going to go backwards in time a little bit, see if we need to update anything for November. And this comes in at 1533. That is good. That number went up a little bit. Let's take a look at active under contract, see if we need to update this. That stays the same. So good news is that November, we outperformed November of last year. The ratio last year came in at 0.94. The ratio this year for the November at 0.96. Remember how excited we were in November? It's like, yay, the market's rebounding. Well, let's take a look at December. See what's going on. December, already 22 days into December. Nothing's going to happen Thursday. Nothing's going to happen Friday this week. And then December closes. I mean, the 31st, nothing's going to happen the 31st. So we really only have maybe 2 days. A lot of places are not going to open up on Wednesday or Friday. I'm going to count Wednesday and Friday as 1 day instead of 2 days. I'm going to say half days. So we've got, we do have a few closings scheduled, but early morning closings on the 23rd. I don't know that we have any closings scheduled for the 24th. I don't think we do. So I'm going to count those two as 1 day. So we've got, let's just say 1 day today, 2 days. We've got the 29th, that's going to be 3. And the 30th, that's going to be 4. We're not going to have anything going on the 31st. So we have 4 days left in the month. Even though it's the 22nd, it's a very short month with the way that Christmas and New Year's fall this year. Whenever Christmas falls on a Thursday, it just about knocks out 3 days worth of sales. And then we have the same thing happening for New Year's. Now we are going to have the 2nd, which is Friday. That's going to be open. People are going to close on the 2nd, but not by much. Especially when you look at the first-time home buyers. No one wants to close on the 2nd because your closing costs will increase. We'll have high-end properties that are okay closing on the 2nd, but a lot of the high-end properties want to close at the end of the year for the tax benefits. So we're not going to have a lot of sales on the 1st and the 2nd, none on the 1st, not a lot on the 2nd. We're not going to have any on the 31st. We may have some on the 30th. We're definitely going to have quite a bit on the 29th. So let's go take a look at December right now. Number of new listings so far. We are at 1653, which means we are not going to beat last year at 2153. That's too big of a delta. Let's take a look at price increase. We're at 565. Price decrease, we're at 3658, 3658, 87%. Not a bad number, but higher than last year. Last year, 85%. What's this number? This number is if I simply take everything that went up versus everything that went down, what percentage went down? That's all it is. It doesn't mean that 87% went down. It means out of all of the price movement, 87% went downwards. 32% price drop divided by active, already beating last year at 31%. So in relation to the active inventory, we have more price drops already in relation to the active inventory, which is really amazing. And we are going to notice more price drops between now and the end of the year. Back on the market, we're looking at 446 back on the market. There's that 27% back on the market. That's going to be the highest month already. And the month isn't even over. Crazy. The last time we had a 27% back on the market was December of 2023 at 28%. We're going to have a higher number. That's going to be higher than 27%. It's going to get up to the 29%. Active under contract, we're at 881, and let's take a look at pending. Oh, yeah. Okay. 6 county area, 2 million people, 881 properties went active under contract, and 792. $792 went pending. That's going to put us at the 0.80 ratio so far. Closed 1538. Withdrawn, wow, 837 already withdrawn. Very close to that 913, and we do have another week left in the month. So we're going to bridge that gap right there. Expired 319. Expired number is really low because guess when the properties are going to expire? December 31st. December 31st. So on the 1st, even though y'all are going to be sleeping in, not I. So we have a little tradition. You know what we do New Year's Day? We go to my sister's house, and at midnight, we all jump in the pool, regardless of the temperature. Doesn't matter if it's 80 degrees like this year or 30 degrees or 40 like last year. We just all jump in the pool whenever midnight rings. So, but then, well, you know what I'm going to do? I'm going to have my laptop with me. I'm going to do that for you all. I'm going to get out of the pool, and I'm going to really quick update this new listing to pending ratio to see how many expireds happened right at the midnight changeover. That's what I plan on doing. Because for me, this is like my hobby. You're like, well, do you have any hobbies? I'm like, of course I have hobbies. I build spreadsheets. That's what I do for my hobby. Harold, I'm going to text you, Harold, now that you said that. I'm going to text you. Let's take a look if I have to update any of the closed information here for the month of November. This is 2033, so we're going to go 2033. Let's see if we have to update anything in October. That agents are really bad with updating. We don't, so we're going to go on that. Let me go ahead and save this really quick. And now that I've saved it, what I need to do is I need to open it up here on a separate computer of mine, just so that I can save it as a PDF. That's why you can see my side profile. So we're going to go ahead and save this bad boy as a PDF so that you all can actually use it for your clients. Because at the end of the day, that is what matters, is you being able to present this information to your clients in a way that your clients will fully understand it. It's just going to take me a few seconds to print this as a PDF. Give me a few seconds. It is publishing as a PDF, and then I will be able to upload it to the website. So we're going to go ahead and upload it to the website. Perfect. It is now uploading to the website. So now when you go to Insight and Statistics, it's just 3 seconds. It is done. When you go to New Listing to Pending Ratio, you are going to be able to see, there you have it. It is all fully updated, all good to go, ready for you to present this to your clients and ready for you to use this information. So let's take a look at a few things here. We updated all of this. And let me open this up as an actual PDF so that we can see the full screen. Let's take a look at the monthly. Monthly year over year. We're down by 23% on the number of new listings. So we are absolutely going to be negative. There's no way, in my personal opinion, that we're going to get 500 new listings between now and the end of the month. Like, not going to happen. So we're going to be down. As a matter of fact, we're going to be down more than 2.2%, which I would say it's a good thing. Like, I actually don't want to reach 20,000 active listings. I feel like that is like a psychological marker in a way. That's a lot of inventory based on the demand. So I don't want to reach 20,000 active listings. I'm looking at the data. I want to be a contrarian. I don't want that to happen. I just don't see how it doesn't happen. On the pending side, we are down 38%. So of course, we're down way more than on the active side. And then on the sold side, we're down 37%. So far this month, we have sold 1,011 less properties this month compared to the same exact month last year. That's a big difference. That's a really big difference. And on that number, when you look at the pendings over the past 90 days, those have been negative 6.3, 13.3. So we are absolutely going to be negative, and we're going to be negative double-digit percentage compared to last year on the sold. We're going to be positive on expires. We're going to be positive on withdrawals. I do believe that. Even though we're down 712 on expireds, we are going to be positive on expireds. Another really interesting data point for us to see is the difference between new and pending. We're positive 426. I like this chart better. That's going to take us all the way back to 2010. That was 636 for the month of December. We're 426 right now. And you can see that last year we were negative. We had more properties go under contract last year for the month of December than this year. This year we're already positive 426. Last year we ended negative 74. And that was the only month that we were negative all of last year. It was a really good December of last year. Last year, December just turned out fantastic. This year, not so much. We're noticed a really big pullback here for the month of December, and you can see that by the ratio. Last year, we had a better ratio, or this year, we had a better ratio in November than we did last year. Same thing for August, same thing for June. So we had June, August, and November outperformed last year. And then we just so far took a big hit right here in the month of December. And statistically, as you can see, December's going all the way back to 2012 had a ratio over 1. And with it being December 22nd, I can say with a high degree of confidence that the ratio is not going to be over 1. And that's going to be the first time that we've had a ratio under 1 for the month of December going all the way back to 2011. The good news is that it's not going to be anywhere close to this bloodbath in 2007, 8, 9, and 10. Like, no way. We're already over that. That's great news. But we're going to be somewhere between the 9.3, the 9.4, maybe get up to the 9.6. That would be amazing if we got up to the 9.6. But it will be the first December going all the way back to 2011 where we did not beat that 1 ratio. And we are 15.3% below average for the month of December. Let's keep on going. Let's take a look at a few more things. Active listings for the 6-county area. This is no surprise. 13.7% year-over-year increase on the number of active listings for the 6-county area. Active per 100,000 people. This is another really interesting metric. Highest since 2010. Active listings per 100,000 people. New listings, we are down 37.3% month over month. That's to be expected. We've had negative month over month for December since records began. Year over year new listings, the only reason we're down is because it is the 22nd, but it is going to be a negative number. New listings year over year. I do not forecast us getting more new listings December of this year compared to December of last year. That's going to be a good thing. That's going to help the availability of inventory not explode as fast. But when you look at the cumulative number of new listings, it will be a record year. Already is a record year. If not one additional new listing enters the market, we will already have a record year on the number of new listings that have entered the market. So as this number goes up, it's just going to hit new records. Every day that you see this updated information, it'll be a new record day. Now let's keep on going. Okay, we've got back on the market. We spoke about back on the market. That's a really, really big number so far, especially on the weekly side. More concerning on the weekly side, pendings. Pendings for December so far. This number is going to go up. It's going to settle somewhere around the 1750s. Cumulative pending. We're not going to beat next year. There's no way. We're not going to get, 1,300 pendings between now and the end of the month. That's just, I don't see that happening. I want that to happen. I want us to beat 2023. I just don't see it happening. But that would be amazing if that happened. I doubt that that's going to happen. So pendings per, let's look at cumulative pendings per 100,000 people. Record low is going to be 2010 at 1,694. We're at 1,678 right now. That's a toss-up. I'll go 50-50 on that. Of course, I wanted to. Well, we can say for certain there are only two possibilities. We're either going to be the worst year on record, or we're going to be the second worst year on record on pendings per 100,000 people. And this is the most accurate chart out of everything because it does adjust for population. So those are the only two options, and I'll go 50-50 on that. Of course, I want the better 50% that we are going to be the second worst, not the worst. That would be terrible. Active minus pending. This is an interesting one. That hit a record. Man, look at that. We're up 32.9% active minus pending. 9,900 active minus pending. Insane. And of course, we've got withdrawn plus expired. This number is going to go up. We are going to beat last year. Last year was 1944. We're going to hit 2000. We are not going to beat 2007 at 2175. That would be a shocker for me. Check your email January 1st at 1 a.m. and you will see what happened. And let's keep on going. Total sold. Let's go sold per 100,000 people. Cumulative. Cumulative sold per 100,000 people. Okay, we've got a winner right here. Not the worst. Worst was 2010, 1141. We already beat that. That's a win. I'll take that as a win all day long. The question is, are we going to beat 1173? I'd say we are. I'd say we are. So that's going to be the win. We're not going to be the second worst. We're going to be the third. I'll take that as a win. Now, here's an interesting one. This is where we take all of the new listings, all back on the market, all active under contract, all pending, all sold, everything, and we compare it year over year. The ratio. The ratio is down 7.9% year over year. That's going to improve a little bit. That's going to be negative. Anytime you see a red, that's no bueno. New listings. New listings, we are already up 4.2% year over year. That number is actually going to shrink down a little bit because we are going to see so many expireds. Or, no, actually, new listings are going to go up. That's going to go up because it's comparing all of last year to what's happened so far this year. So we are going to get additional new listings. That number is going to go up. It's not going to be last year at 8.7%. It's going to land somewhere around 5%. Back on the market. That is interesting. That is already up. That's already up 14.2%. So we've already had 1,100 more back on the market this year compared to all of last year, and we've got 1 week left in the year. So that number is only going to go up. Here's the good news. We've had already more active under contract this year. Now, we've also had way more back on the market. But I'll take the win. 271 more active under contract this year, 1.2% compared to last year. That's a win. On the pending side, though, down 6.7%, which means the total is down 2.7%. So the question is, are we going to get 1,209 more properties under contract in the next 7 days? I'm going to say that we are. I feel really good. I feel very confident. I feel very hopeful. I would say that we are. It's the holidays. Agents are really bad when it comes to updating information. Builders are really bad when it comes to updating pendings. We've got 7 days to get 1,200 properties under contract, listed as under contract. I think the market can pull that off, which would be a huge win, where we would outperform last year on the total. I feel confident about that. I'm going to go with that as a very high probability. Not on the sold. I do not feel confident on the sold. We're already up 13.1% on expireds and withdrawals. That number just keeps on exploding, and that is going to be, way higher than that. That's going to be higher than last year, 2024 compared to 2023, no doubt about that. So we're at a 0.735 ratio, slightly less than 2011. So we've had now we got 1, 2, 3 years in a row, 4 years in a row, 5 years in a row. 1, 2, 3, 4, 5. 5 years in a row where we're noticing a pullback on that ratio. And this is going to be the lowest ratio going all the way back to 2010. The lowest yearly ratio going all the way back to 2010. Let's talk about inventory. We are currently at 13,750 active listings on the market. 56.7% of those have had a price drop. 15.1% year-over-year increase on the active listings. I do want to bring your attention to something really interesting. Look what's happening here compared to here compared to here. Do you notice the difference? What's the difference? Can someone spot the trend? Maybe it's a little bit easier if I just do a square, because then you can actually compare. Compare that. Similar in a way to 2024, but you see how it's flatlining, a little bit more pronounced in 2024. 2023 it kept on going down. So the number of active listings, we're noticing it's holding steadier this year compared to last year. And of course, we went over this one, pending. Y'all, take a look at pending. We are at 3,416 pending. It was 3,598 last year, so that's a drop of 5.1%. This is going to be the 2025 is going to be the bluish purple. 2024 is going to be the red, and look at that gap. So we are now under 2023, under 2024 on the pending. Out of the 3,416 pending, 1920 are resale and 1496 are new construction. Activity index, we are back under 20%. And of course, you know that 20% is what? What do we call the 20%? That's going to be that danger line. Anything under 20% is going to be that market contraction. We want this number to be over the 20%. It's been over the 20% now for a few weeks. As a matter of fact, if you look at the active residential listing resource that we have been over 20% every day going all the way back to November 17th, so well over a month. Oh no, we have some 19s here. So right on Thanksgiving, Thursday and Friday, Thanksgiving Day and the day after Thanksgiving, that number dropped down to 19.9. We're at 19.9 right now, and we've got a few days left for Christmas. I would say that number is going to drop down to the 19.5, 19.4. I did update, by the way, the market performance. I want to show you that. Some really interesting patterns that we can analyze on the market performance. 3 zip codes are on the strong demand, rising prices. And we've got, what does that come out to? 49 zip codes. 49 out of 75 are under that 20%. The market stalling. 23%, 1/4 of the market is officially in what's called a buyer paralysis, where price corrections escalate. Anything under 15%, 3-2, 4-1, 2-2, Burnett, Lago Vista, Lockhart, Dale, Bastrop, surrounding areas, but then you go down to 5-3, 8.33% activity index. And then you get down to 2-1. 2-1 is just collapsing. 2-1 is just collapsing. Crazy what's happening 2-1. We went over this, went over this. Months of inventory, we're at 4.92. And here's another trend that I thought was interesting to analyze. Look at what's happening with months of inventory last week of December compared to last year. Did months of inventory all of a sudden go up last year? No, it kept on going down towards the end of December. we closed out December where every single day months of inventory went down. And now we notice a little bit of an anomaly here over the past few days where months of inventory is actually ticking up a little bit. And keep in mind that months of inventory is going to be that lagging indicator. Let me pull this up again and look what's happened here. So slight uptick, 4.1 to, or 4.91 to 4.92. I mean, it's a slight, tiny little uptick. My thing is this, it's not the fact, it breaks the trend, because it's historically, months of inventory will always go down towards the latter part of the year, especially the last week of the year. And why is that? Well, you've got your quits, your withdrawals, your expireds, you've got more properties going under contract, active listings go down, and active listings are going down, they've been going down, and yet months of inventory went up. Why is that? Because solds are now taking a hit. Solds are now going down. And what are we doing? We're dividing the availability of inventory by what has been selling. So we noticed a little bit of a shift there that we're not used to seeing this time of the year. We do have still an incredible number of zip codes that are still within the seller market inventory level. So much so that we've got 43% are in the green. 43% of the 75 zip codes that we track are still in the green, which is amazing. And then you've got 2-1 Elgin, 11.92. Crazy what's happening. And of course, good old Dale capping us off at 26 months of inventory. Good news, year to date, from January to December, inventory in Austin is actually down. Year over year, inventory in the city of Austin is up. This is a very optimistic projection on closings. And the reason I say very optimistic, because so far, 1,548 properties have closed in the 6-county area. And I'm saying that we're going to be down year over year, but I'm forecasting that we're not going to be down by much. But that's super optimistic. I would even say, based on what I'm looking at right now, 1,548, I'd say we're going to be close to 2,000 to 2,100 instead of 2,400. So some of these projections are based on 2,400. So if for some reason we're at 2,100, that's going to bring these numbers down. Pricing is up on all levels except for the median year over year. That is now down 0.2%, but the month over month is up 4.6. Historically, that's always been up, so that's totally fine. That we expect December to be positive month over month on both the average and the median. But year over year, we are negative on the median. Let's keep on going. Let's take a look at market performance really quick. I want to show you this information with a really, really big disclosure that this is partial data. It will improve, but we are far enough into the month, especially with the holidays coming up, where we're not going to have sold data. Title companies are going to be closed for at least 2.5 days out of this week, 2 days next week. So this is good information, and yet it's going to improve. Active to pending ratio, we are right now at 6.92. It's going to go down. It's going to improve. But it being the 22nd of the month, that's a really high number. Active to sold ratio, that's going to be 7.52. The historical is 4.2. We're going to notice an improvement, but that's a really, really high number. Let me show you the ones that I really, really like more than anything. Okay, here we go. Absorption rate, sold divided by active. It's going to improve, but it's not going to beat 15.7. It's going to land, well, maybe it will. I sure hope it does. because of course we're going to have more sold properties. And actives are going to go down because of the pendings, because of the expireds and the withdrawals. So this number is going to improve, but we're not going to outperform last year at 25%. I don't see that happening at all. The activity index is interesting because we are right now, pending divided by active plus pending, we are matching 2008 at 12.6% right now. And we are going to be really close to 2007 at 16%. We're going to beat 2008. I'd say that we're going to settle somewhere around the 2007 mark on the activity index for the entire area. And market health, let's keep on going. I'm going to show you, let's take a look at this one. Oh my goodness. This number is not going to change dramatically. It absolutely will go up. What this is I call this the market efficiency, market turnover efficiency score. And what it does, it shows you how fast the Austin market is moving. This is going to be your 0 to 100 miles an hour. 100 meaning the market couldn't possibly move inventory any faster. What it does is that it blends the following inputs. How many homes are selling, how many new listings are coming on the market, and then how fast buyers are putting homes under contract. So how fast is the market moving? Historically, anything above 70 is extremely hot, and anything below 30 is very slow. A true market turnaround, this is the key right here. This is what I want you to pay attention to. A true market turnaround in Austin begins when this number climbs out the bottom range and consistently moves into the 14 to 18% zone. That shows us that buyers are returning and inventory is finally starting to flow again. Historically, we've got tons of data to prove this. This is going to be where people say, well, Dan, when do you think the market is going to return? My thing is, when I see this number moving into the 14 to 18% zone, until this number consistent. See, we had a 14.7 right here, and we were very hopeful. We're like, okay, 14.7. It's a little bit of a bounce up. This is good. This is going to be the best ratio that we've had now for 10 months. We just didn't see that momentum carrying through. It's using all of these inputs. And now, so far, yikes, y'all, we're at 2.2%. It's going to go up. It's going to improve, but we're not going to be anywhere close to that 14 to 18% zone. This projects the market 12 to 18 months out. It does. And we're at 2.2% right now, which is really, really low. Even if we end at the 5%, I mean, that's going to be lower than 2007. The lowest ever was November of 2008, right during that Lehman Brothers collapse. That was the lowest ever. Nothing was going on. And so far for the month of December, yikes, we're only 20 basis points off of that, which is insane. I mean, I just crazy. Buyer confidence, Decembers are usually low on that. Let's keep on going. This is going to be that market flow score, meaning 0 to 10, how's the market? A little bit better than November when you take this into consideration. But not as much of a leading indicator on this one, but take a look at the activity index. So far, the activity index is at 12.63. We ended last month under 20. We're going to end this month under 20 also. We're at 12.63% activity index right now. Well under the historical average of 26.76. Here are the encouraging things. You need to be ready, willing, and able to purchase a home for the market to experience a turnaround. What I'm noticing right now, talking to you all, looking at our web activity, which has been exceedingly encouraging, and this is what I'm really excited about. When you go to our impressions over the past 12 months and you look at our clicks, I mean, we're at 5.62 million impressions on our website over the past 12 months. Keep in mind that back in February, my goal was 2 million. By April, I doubled that goal. I said, okay, I want to get to 4 million by the end of the year. And so we've 3x'd our original desire for impressions on our website. I wanted to be at 25,000 clicks. We're at 54.4 thousand clicks. 5.62 million impressions. That's great. That's really good. Our average position is increasing. All of the stats are improving across the board. So we know that buyers are out there looking. When I do the reverse prospecting, I see it hit a lot of people's searches. So I know that they're ready, they're able. It's the willing part. Are they willing? That is like the three-legged stool. That's the one piece that is not falling into place right now, is that willing. So what can you do? Stay in touch. Right? It's not a matter of convincing. It's not a matter of being the 1980s salesperson. Oh, you're going to miss your opportunity. No, not at all. The deal of a lifetime in real estate comes around once a day. They're noticing that. They're seeing that. They're expecting rates to be better by January, February, March, April, May timeframe. They're expecting that prices are going to improve. So there's that willing part that is being held back. Don't give up on your clients. Right? They love you, they trust you, they want to use you. If they feel like, oh man, my agent just is no longer talking to me, like they just want to sale in the next 30 days, let me shop around. Don't have commission eyes, don't freak out. I said this, everyone at Team Price could have the best year ever in 2026. It's not going to be your easiest year ever, but it can certainly be your best year ever. But stay in touch with your people, provide them with that substantial value, reach out, do all the things that you need to do. The market reports are critical. So there's a lot of demand out there that's just looking at the market, analyzing the market, be that trusted individual that will be honest with them, will tell them the truth about the market. And if the best thing for them is to wait until March, April, May when inventory goes up and we've got a better rate environment, well then, God bless them. Just be there for them then. In the meantime, just hustle like an absolute maniac. So people are ready, they're able. We're seeing that through mortgage applications. We've had a really decent improvement in mortgage applications, up 20% year over year. It's the willing part. Are they willing to move forward? And the answer is crystal clear. The answer is no, not yet. That is the answer. The only way to stay in the game is just to keep on providing them with substantial value. It is going to be a fairly decent week for rate data. We've got inflation numbers are going to come out. We've had a better than expected 6-month T-bill auction that just happened here at 10:30. We've got in 1 hour a 2-year T-bill auction. Tomorrow's going to be a big day. We've got personal consumption expenditure. That's going to be inflation. We've got building permit data. That's going to come out tomorrow. We've got Dallas Fed PCE, also inflation. We've got GDP data coming out tomorrow. That's going to be interesting. That's going to be preliminary data from Q3. We've got more inflation data. We've got housing starts. So a lot of personal income, personal spending. So really big day. Consumer confidence, that's going to be really big. New home sales, tomorrow's going to be huge. I'm going to be really busy updating all of this information. Wednesday, we always get mortgage applications on Wednesday. The market's going to close at 1300 hours, also known as 1 p.m. Of course, nothing happens on Thursday. Friday, it's important for some of our other agents in the state of Texas, near Midland, all that. This is a number that they're going to track. It's going to be interesting to see if the oil rig count goes down, because, of course, oil has gone down by quite a bit. So what's going to happen with rig count? A lot of rigs are not going to be profitable at under $55 a barrel. Right now, we are at... Let's take a look. What are we at? I like using trading economics for commodities as opposed to the other one. So we're at 57 right now, a little bit of a bump up. We got down to the, 55. So they're semi-profitable right now. So as long as we stay over that 50 to 55 range, we shouldn't see a huge drop off. If for some reason we went under 50, that's when you start noticing rigs, especially within Texas, just start shutting down. They're just not profitable. Shut it down. We're actually losing money on this, so just go ahead and shut it down. 57, this is going to be good for the consumer. Not the best for people that are, selling the oil, but certainly good for the consumer. Brent crude is going to be a little bit higher. That's going to affect Texas more than just overall crude oil. Brent crude is going to be more so affecting Texas. So the fact that this is up to 61, I don't expect there to be a drop in rig count. But that affects more Midland area, Houston area. It really doesn't affect the Austin area at all. It's not affecting that at all. It is 11:12. It is 11:12 right now. Any questions? Any questions, comments, concerns, criticisms, or complaints? Bond market right now, it's up 2.2 basis points right now in the 10-year Treasury. So that is up right now 2.2 basis points. Let's see if we can get the market, and let's go to bonds, and there's at 4.16. So we noticed a little bit of an uptick right there, but overall, pretty decent trajectory in the bond market. We've been pretty steady around the 4% going all the way back to 2023 at this point. So we're used to that 4%. That's going to be market rates right now. Any questions? Any questions, comments, concerns, criticisms, or complaints? Want to remind you all, we do not have a meeting on Wednesday. Do not have a meeting on Wednesday. Any questions? Any questions, comments, concerns, criticisms, or complaints? Going once. When is our next meeting? Our next meeting is going to be on Monday. On Monday. Monday is going to be our next meeting, our Monday morning touch point. We're going to do a complete overview of how the year turned out, and that's going to be our next meeting. How does that sound?